All right, time to welcome our market guest, Dhananjay Sinha, now joins in from Emkay Global Financial Services. Dhananjay, hi, good morning. First, a word on ITC. That stock has rallied 5% today after this news that that ban may not come into effect, the sale of loose cigarettes. But how would you approach this stock? It has been a rank underperformer year to date.
Yeah, I think in this stock there has always been this regulatory burden, wherein the government has been somewhat strict with respect to the cigarette consumption. There has been increase in tax rates on that, and there were certain news with respect to the sale of loose cigarettes. So I think it has been under certain drag, but I think at the current price it does appear to be very well valued. So I think this news that came around yesterday that that the government might actually reconsider its thought with respect to putting a ban on loose cigarettes, I think that is giving certain amount of fillip to the stock. I think it's a reasonably well valued stock. One can actually buy that.
Okay. Dhananjay, hi, good to see you in this morning. That's on ITC, but just wanted one quick question on the markets as well, because what we saw today was an absolute consolidation after touching that all-time high in the early minutes of trade, and we consolidated for the frontliners yesterday as well. Do you think that the markets could continue a little bit of consolidation, and if so, for how long? And if there is an up move, what would the next trigger be for the markets to lead to that up move?
See, I think, I have been somewhat skeptical about the run-up that has happened because, if you look at from a fundamental standpoint, earnings have not been really growing. And you see that after the Q2 results, more downgrades have happened than upgrades. Okay. And you see that the top-line growth of companies have been fairly flat. Reduction in commodity prices did not translate into higher operating profits and PAT growth. So I think in that context, there has been a significant run-up already that has happened. The last one was on the back of the fact that there was a reduction in commodity prices, and the market actually, which was running on high octane, went up further. There was further fillip over there. Now, in the overall context is that people believe that reduction in or lowering of the commodity prices, especially crude, will translate into lower inflation, lower current account deficit, saving on subsidy, and lower imports, etc. That translating into high earnings. So that's the thesis that the market is actually running on. And the assumption is also that there will be a positive correlation with so there is a negative correlation with a softening in crude prices. Your GDP growth will actually go up, and hence the earnings as well. Whereas, if you look at historical data over the last 20 years, it's actually the other way around. Actually, most of the times, lower commodity prices and crude prices along with it has been accompanied with lower GDP growth and lower earnings as well. So I think the conventional wisdom is somewhat in contradiction with what the empirics are. And hence, my sense is that, the market may have actually been pricing in a lot of things. The critical issue that we have highlighted, we came out with a report yesterday where we said that, with the lowering of crude prices and also commodity prices, the bigger issue will be arising for the government with respect to tax revenue. So tax revenue actually declines with decrease in commodity prices. That far overweighs saving in subsidy for oil. So the problem is with the government, with the lower commodity prices, and that will actually impinge upon government's ability to actually support growth and spend. So there will be spending cutback. The government has already announced that, and that has an impact on the growth. So overall, from a market standpoint, it's been pricing things which are not there. So it is possible that as the realization seeps in, there might be a certain amount of consolidation that one can expect. Today, if you look at it, everybody wants to hit the market to raise funds, and investors also very well, lapping it up as if there is no tomorrow. So everybody wants to raise funds today, and the frequency of the QIPs that you see also try to sort of indicate that. Okay. So I would say that there is a consolidation phase one can expect.
Okay, since we're talking about commodity prices and crude prices, Dhananjay,
Right.
one stock which has rallied 50% now in a matter of 3 weeks is Jet Airways. How would you approach Jet Airways in particular and aviation stocks in general?
Yeah, I think there is a positive spillover. See, if you look at the decrease in commodity prices, it will affect positively certain companies which have pricing power and where margins can actually expand. Raw material to sales ratio will actually decrease. So aviation definitely is a first contender over there, and it is a clear beneficiary in a scenario where crude prices fall. I don't think there will be a reduction in airfare on back of low commodity prices. It does appear that there is a certain pickup in terms of the traffic movement, passenger traffic movement. So I think a sort of a resilient traffic movement and lower crude prices, that translates into lower ATF price as well, will be a positive influence for Jet Airways and other aviation companies.
Okay, Dhananjay, what is your sense on ONGC?
So ONGC, we have been positive on the stock, and I suppose that since the government will be seen to be more proactive in terms of trying to improve the fundamental of the company, as there has been a reconsideration with respect to the subsidy sharing formula. Given the context that the government fiscal will be under considerable stress, we are anticipating something like 1,20,000 or 1,30,000 crores of shortfall with respect to tax revenue target. So the government will be proactive on the disinvestment front, and hence putting the right foot forward in front of investors is something that I would expect government to do, and hence this full reconsideration on subsidy sharing should be, one can expect that to be somewhat positive, come up with a certain positive outcome when the government finally announces what it wants to do on the subsidy sharing thing. So one should actually buy the stock. It's a positive bias that we have on the stock.
Okay. What about mid caps? Finally, Dhananjay, what kind of stocks would you recommend buying right now?
I mean, the mid cap stocks have rallied quite a bit actually, and it has to be very case to case here. See, and it varies across sectors. So the thing is that we have been looking at TD Power within the capital goods space as a small cap company. Within the infra space, I mean, that's a capital goods thing, quite apart from the fact that we have been liking L&T for quite some time in the large cap space. In the infra space, I think we have quite a few names. We had been looking at Sadbhav, J. Kumar, and we also liked Adani Port. So this is a set of companies in the infra name. Within the FMCG names, we think that decline in commodity prices will impact positively companies which can actually which can benefit from lower commodity prices and raw material to sales ratio. So over here, it's a mix of large cap and mid cap. So you have Asian Paint, Berger, Colgate, Britannia, and Pidilite and Nestle. So these are companies which we have identified as companies that can actually benefit in the current context. We also believe that there can be EPS expansion for companies where the raw material sales ratio is actually high and where there is reasonable volume growth in the auto space. So we like TVS over here, apart from Ashok Leyland and Hero Motors.
Okay, fair enough. Sure, go ahead.
Sorry?
Sure, go ahead.
So these are the things within the oil and gas space. While I have mentioned our overweight on ONGC, we also like OMCs. But in the mid cap space, the positive implication can arise to companies such as Petronet, LNG, IGL, Gujarat Gas. And in the banking space, we continue to be sort of inclined towards private companies or private banks. But within the mid caps, things which are not under coverage, we have been liking also Kotak Mahindra Bank, SKS Microfinance is something that we believe can be a compounding story, and Shriram Transport is another company that we like.
Okay, fair enough.
Within the cement space, Yeah, within the cement space, we have JK Lakshmi, JK Cement.
Okay, all right, that's a huge list of stocks, Dhananjay, which our viewers could benefit from. So any disclosures you'd like to make before we wrap up the conversation?
No, so basically, I don't hold any stocks that I have mentioned. So, we have been recommending these stocks to our clients, institutional clients. So that's what I would want to say.
All right, Dhananjay, we leave it at that. Thank you very much for joining in and talking to us. So that's the view coming in from MK.